Krish Sankar, Cowen senior research analyst, joins us this morning. Krish has a buy rating on Apple, price target at 220. I loved the report this morning, Krish, in which you basically argue that to a large degree their reshoring or their smoothing out of the supply chain out of China is just getting started.
That's right, Carl. Thanks for having me, and thanks for the kind words in the report. It is a good team effort. Yes, I think what you're seeing there is that there's been a slow, gradual shift away from China, but I would say that we're still in the very early stages. I don't think it's ever going to be 100% complete, but there's definitely some diversification of the iPhone and also the Mac and the iPad away from China towards places like India, Vietnam, Thailand, etc. Still in the early stages, but the one thing I would say is that when you did an analysis, over the last since 2018, if you look at the four big ODMs for Apple, they've cumulatively invested close to $45 billion in kind of moving, not necessarily reshoring away from China. There was some investments in China too, but also towards non-China entities, kind of like US, Mexico, India, Vietnam.
We never like to ask analysts about competing reports from their peers on the street, but I do wonder if these last two rounds out of Barclays and today Piper move you in any way when they talk about sort of macro weakness, valuation concerns, difficult times ahead in analog.
I think, if you look at it, if you look at the main iPhone data points that have been coming out, I think December numbers have been pretty fine. I think people do worry a little bit about the March quarter, the setup into March. And I would think for the full year, I think it's still early to judge. I would say that, if you look at consensus numbers, iPhone is probably going to be flat to slightly down, depending on whom you talk to on a year-over-year basis in calendar 24. I think it's too early to make a call on iPhone for the full year. But at least given, when you look at some of the supply chain information, March quarter definitely seems to be slightly on the weaker side. It's not a big surprise because usually June typically tends to be the weakest quarter for iPhones because they purge the inventory and waiting for the new phones that come out in September. I'm not too worried about it. I think the reality is that, yes, the iPhone numbers do seem a little weak, but services still is looking pretty okay. Margins still should hold up. I think it's too early to make a call that, iPhone is kind of done for the year.
What is the upshot, Krish, of your proprietary data on reshoring and manufacturing? Is Apple less vulnerable to geopolitical tensions and worsening relationship between the U.S. and China?
So, Sarah, the two things I would say is that, like I said earlier on, we're still in the early stages of the reshoring. So it's going to take a while. It's not going to happen overnight. But obviously, diversification is good for the supply chain, good for Apple, because of, you don't have to worry about geopolitics, etc. The second thing I would also say is that, we bring the example of TSM. Pre-pandemic, TSM actually had a higher valuation or traded a higher multiple compared in the last few years because as more China-Taiwan concerns kind of came to the forefront, the stock kind of got a discount. So I would say that over time, we can see a scenario where Apple stock gets a premium multiple as they have more diversification away from China. Like I said, I don't think it's ever going to become completely immune from China or any of the Asia supply chain, but at least the diversification helps. And I think it can help long-term with the valuation too.